Let's move on there and focus on Narayana Health. The company's revenue and margins came in line with street estimates for the first quarter. The margin is above 20% for 8 consecutive quarters now. To talk about the performance and the way forward, we have Sandhya J, Group CFO of Narayana Health. Sandhya, thanks so much for joining in. I'm just looking at the numbers, as we kickstart the conversation. And it's been a pretty good quarter because I think your revenue, both for inpatient and outpatient, it's shown a decent improvement. Can you just tell us what the occupancies are like? Though I know you always make that point that now, people have to spend lesser time in the hospital because of the advancement in technology. But just to get an idea of, average occupancies and the average revenue per patient.
Sure. Good morning. Thank you for having me here. So from a Q1 point of view, I think both from a revenue point of view and from a margin point of view, we've seen, I think, a good expansion. From average revenue per patient, that's measured in IP and OP. So our IP ARPP is about 1.29 lakh. That for the same quarter last year was 1.18. So there is an expansion there. And OP ARPP, which was about 4,089, is now 4,400 odd. So there is expansion on both of them. As far as occupancy is concerned, like we've always said, it's not a very accurate measure. We always aspire to be on an occupancy range of between 60 to 65%, which is the midnight occupancy, which then is a much higher occupancy in the daytime because of the daycare, which you explained. So this being a little bit of a weaker quarter for healthcare, we've come more on the lower end of that range for this quarter.
So that would be closer to 50% occupancy?
60 to 65 I mentioned, so we'll be in the 60% range.
Okay. And what about, the trend from here on? And if you could also give us some sense on the more evolved, the higher level surgeries, what has been the pickup on that side of the business?
Yeah, so in Q1, we've seen a lot of high-end procedures coming through, both because of the awareness which is being created in terms of high-end procedures, but also in terms of the convenience of patients. What we've consciously done is made significant investments in the current year in terms of our own robotic program. So therefore, we have robots coming up across our hospitals on top of what we already have. In addition, we've also continued to strengthen our transplant programs as well as our orthopedics programs. So therefore, we will continue to see an upward trajectory on all the high-end work that we are currently doing.
All right. Hi, Sandhya. Good morning and good to see you. Just to understand, as a percentage of the total mix, what is it at high-end surgeries as a percentage of your mix? If you could give us that number, what was it? What is it? Where do you see it headed?
Sure. I'm not sure if you've put that number out there because there is no clear industry definition on high-end surgery. But what we will do is probably work on this a bit and then come back with a little more industry-aligned approach, because we may have an internal measure, but we would want to share something that's more comparable with the industry. So maybe, when we speak next time, we'll come with a better measure on high-end surgeries. I think it's a good call-out to have.
I got that. Sandhya, hi, good morning. Prashant here. Could you give us a quick sense of the sort of capacity expansion plans afoot at the company, and how many beds by the end of the year, and just give us an overall sense.
Sure. So as you're aware, we've been on a little bit of an intense Capex drive over the past few years. We've done 1,000 crores each of Capex the past 2 years, but it's a big chunk of that was in Cayman. Now, Cayman expansion is completely done, so all the money is pivoting into India. This year, we've guided between 1,600, 1,700 crores of Capex, and I think we will be in a similar range for the next few years. Having said that, we will not be creating any significant bed addition in the next 2 to 3 years till our capacities come up, because all our projects are greenfield at the moment. We are building capacity because we believe that is the most effective way of return on capital in this. It's because it's a very asset-heavy industry. So therefore, you will see a lot of Capex intensity over the next few years. But the inflection point or the return on those Capex intensity, either in terms of number of beds or in terms of revenue growth, will come a few years down the line.
Sandhya, will that capex intensity be all organic ground-up growth? Or are you looking at inorganic assets as well? Because there's a lot of consolidation going on in the industry. There's so much chatter around, for instance, Aster DM, etc. So just want to get your thoughts on it.
Largely, we are looking at organic growth. We looked at inorganic opportunistically, but because ours is a model where we want to be cost effective to our patients as well, therefore, we are not going after assets which are very high priced. So therefore, we will be finding that balance. If we find the right cultural fit, right price fit, we will be interested in those assets. But the way we've looked at this market so far, I think we've been more indexing on own build. That seems to be fitting into our parameters better.
Can you just give a geographic breakup in terms of the rollout as the capex comes on stream and more beds get added? Will it be sort of more skewed towards the west, south, north? I mean, just some idea of geographically where Narayana will be, say, a year down the line when this capex comes on stream.
So the capex will come on stream over a few years because building a hospital takes 2 to 4 years, depending on the size of the hospital you are building. But in terms of priority, it is Bangalore and Kolkata. So a large part of our capex will go into Bangalore and Kolkata. We are keeping aside some amount of capex for our other regions where we already have presence. But those we are taking up after we've exhausted the opportunity set here in our core market, which is where our ROCE is highest and also our return in terms of revenue and margin performance is healthy. So we are allocating more capital into the healthier part of the business to start with.
All right, Sandhya, we'll leave it there. Thank you very much for your time. Appreciate you sort of coming on and providing that outlook for us.